When it comes to accounting in Tenant Cloud and your year-end taxes, everybody knows that can be a pain. And that's part of what makes Tenant Cloud so powerful is that not only is it an end-to-end property management system, but it also has a full accounting and tax preparation side to it as well. And so Tenant Cloud really helps you keep track of all of the information that goes into your taxes. And it helps you to do two things. One, to avoid an audit in the first place. And two, if you do ever get audited, it provides you with a record, a system of record that allows you to track all of your accounting, all of your income, all of your expenses, so that at the end of the year, it's a lot easier for you to file your taxes and for the owner of the property to file a Schedule E. And it provides you all of that information in the Tenant Cloud Tax Prep Report. So that's a really powerful key part of the Tenant Cloud accounting system. Now, Tenant Cloud provides an accounting page and a reports page. So in the accounting page, we'll jump into it real quick here. You'll see that you just go to the accounting tab on the far left menu, and you'll see up here in the top that you have the access to filter this page. So if you click filter, you'll notice that you can filter by date range as well as by accounting type, whether it's accrual or cash accounting. And you can also sort by transaction status, whether it's open, paid, partial, pending, void, etc. Also the transaction schedule, if it's a one-time or recurring invoice. And then also who the payer or payee was, and as well as you can sort it all the way down to the property and the unit, and then all the way down to the transaction type and category. Is it an income, expense, refund, credit, liability? And then what category is it? And so you can filter a lot of information, and if you want to just reset it, you just click reset and it brings you back to show you all of the transactions on your accounting page. Now, if you want to look at all this information in a cohesive report, you can actually do that by going down here to the reports tab. And Tenant Cloud has not just a tax prep report, but we have quite a few reports in here that people use, such as the property owner statement report, the property statement report, profit and loss, general income, and so on and so forth. And the one that we're really going to focus on for this particular webinar is going to be the tax preparation report. And this is where you're going to be able to access that. Now, the tax preparation report and all of these reports are going to contain the information that you have entered into the accounting side of Tenant Cloud. And it's important to note that most of the accounting transactions in Tenant Cloud are going to be automated, because when you move a tenant in, so you go to contacts, and these are all tenants that I have moved in. So when you move a tenant in, the system is automatically going to be charging that tenant the monthly invoices based on the lease information that you have entered. So if a tenant has $1,000 a monthly rent and they have $50 for pet fee and a $10 pet rent for each month, and so on and so forth, the system is automatically going to generate those invoices. And if the tenant is also paying it online, you really don't have to do anything other than move the tenant in the system. Everything else is automated for you. And so a lot of the accounting entries in Tenant Cloud are automated. And that saves you a lot of time as a property manager or a DIY landlord. Likewise with management fees. If you go to the accounting tab and you go to management tools, you'll see that the system is automatically generating management fees, and I don't have any owner distributions right now, but if I had, the system would also be showing all of the open owner distribution invoices here as well. And this is another part of the accounting side of Tenant Cloud that is completely automated. It does the calculations for me. It does rental income minus expenses, including management fees, and then calculates the owner distribution for the month for me, generates the invoice, and all I have to do is authorize the payment to the owner of the property. And so pretty much all of the accounting inside of Tenant Cloud is automated, aside from the random here expense or income here and there that's not a regular routine recurring income or expense. So that might be a situation where a tenant submits a maintenance request that results in repairs that need to be made. And so there's two ways that you can enter a income or expense invoice. The first one is right through the accounting tab. Inside of the accounting tab, you'll see there are two buttons. One says money in and one says money out. Pretty easy to understand. Money in, if you select it, it gives you the option for the different types of money in that you can record. So whether that is income or credits for a tenant, such as if a tenant has worked on your property in exchange or in lieu of actually paying you funds for the month. So let's say you have a broken gutter. Your tenant says, hey, I'll repair the gutter. You give them a credit of $100 towards their rent for that month. You really do need to record that as income because you have to report that type of thing as income according to the IRS. So you would click for any money in, you would just click money in, income, put in the information, who the payer payee is, the date it was due on, what date it was paid, and or if it wasn't paid, you would just leave that blank. And then enter the other information in, such as the category, subcategory, the amount of the transaction, and any details and receipts that you might upload that are relevant to this particular transaction. And if it's already been paid, you would click Mark as paid. If it's not been paid, then you would select Create Invoice, and that generates an invoice in the system that is now an open invoice that needs to be accounted for, whether it's been paid or not. A week later, 2 weeks later, whenever it's paid, you'll just go back in and update that invoice. And there are two tabs across the top, property income and general income. Property income is going to record this income or expense, in this case an income, to the property level, which is going to show up on the Schedule E, which is the tax prep report, which provides you the information to fill out the Schedule E at the end of the year. General income is typically going to be recorded on the property management level if you have a property management account. This would typically be recorded to the property management level, not necessarily to the property level. And typically these accounting entries will not show up on the Schedule E report. Jumping back, the same thing it's the exact same process for if you were recording an expense. You would click accounting, money out, expense, and you would go in and enter all the same information and decide whether it is a property or general expense. Likewise, this information here, as you manually create these entries in TenantCloud, they will also show up on the reports just like all of the automated accounting entries do in TenantCloud. So that is how you create these invoices and create accounting entries if they're not already done automatically through one part of the system or another. The second way, I did mention that you could create a income or expense invoice, which we'll cover in a little bit. But before that, we're going to hear a little bit from the CEO of TenantCloud, Joe Edgar. He's going to jump in here real quick and give us some more insight into real estate taxes and property management and DIY landlord advice. He's been doing this for quite a long time and owns quite a portfolio of real estate. And so we wanted him to jump in here and give you some of that information. So without further ado, take it away, Joe.
Yeah, thanks, Chris. No, I appreciate it. Always glad to be in on a webinar and play inside the product and be able to, really show off what it is that we've done. I mean, being a landlord or a property manager comes with lots of challenges. And so it's fun because most of the year, the challenges you're dealing with are not the ones that end up counting towards tax time. But we have to keep them in mind, otherwise we've done it for naught. And so having a lot of those things in focus are important. And so basing that, TenantCloud was really built around the problems that I had as a DIY landlord. One of them was, depending on what city I was in and what properties I had, they had different property management software. And so some of them would send me, these software printouts for owner statement, of which they gave me every month's statement for 12 months. And I had to go look through each one of them and do my own math in the back of all these PDFs to be able to fill out what is known as the Schedule E. And Schedule E is part of your 1040 form. So everyone who has a property is filling that out in order to take their tax exemptions. And to do all that math, it would just get so frustrating to have to do all that for all these various properties. I say, why can't this already be done? And so in TenantCloud is one of these basic problems. I mean, Chris had already gone through some of these examples here in the demonstration. So think about, a tenant submits a maintenance request that involves, let's say, a toilet. toilet's broken, you got to go fix it. It's got a cracked valve and a screw, so you're taking it up, you're honing it in, or you're calling someone to do all that. And at the end of it, it's been a long day, you're frustrated, and the last thing you really want to think about is where's that receipt and how did I store it to make sure it got accounted for so I get my full deduction or I can invoice someone. And so what is nice about TenantCloud is when your tenant submits a maintenance request, that maintenance request comes with categories, subcategories, issues, and sub-issues. And then they are already matched with your expense categories and subcategories, and even matched to equipment. But what's great, all of those are now mapped and matched to the IRS Schedule E categories. And although that sounds like a really easy principle to be had, let's explain why that is so important as a DIY landlord. If you currently were to go through an audit and you aren't one who's, a mathematical genius or an accounting star, and you supply for your audit a drawer full of receipts that is now held in a bucket on a shelf with, a black marker that writes the year on it. So you look back in 2019 and 2018, 2017, and there's just huge drawers full of receipts where I can see the shoe print as, those receipts laid in the bottom of your car, which I'll be honest, I know because that was me. And so as you kind of run through all those and you're like sorting them out, you think, well, you know what? At least at the bare minimum, the IRS will be happy because I kept every one of those receipts. You never took the time to add up what all those receipts equate to, so you ended up just guessing on the final one, but you still have a drawer full of receipts and you think, well, I'm pretty close. Well, you have a problem because the IRS is now going to look through every one of those receipts, and to you know that those expenses equate to real time and energy and money that you spent, and it was for that property. But for the IRS, if it's not documented to show that that Home Depot receipt was specifically used for that property, it doesn't count. And that's what's really bad about not being organized in this business, because the number one thing we're doing this for, we don't wake up in the morning and say, I just want to be a landlord. I just want to get calls all day about all these things broken. I want my tenants to bother me all night about the light that they need to change the bulb. That's what's wrong. Change the bulb. We don't wake up wanting all this. We do it because one of the best gains in real estate are the losses. What does that mean, the losses? Well, as you all know or don't know, every person, as married couples have a nice added benefit, but individuals, as a married couple, you get $25,000 in additional losses that go towards your AGI, which is your gross income that you're going to be paying your final taxes on. And so that's really important, because that means if you buy a rental, you have now just become a small business and recognized by the IRS as a small business without even having to create an entity, a name, or anything. All you do is you have a rental. And although you may think it's not fun to count losses, but when it comes to real estate, there are losses that don't actually cost you money. And I know that is a crazy thought. But those of you who are already listening, you know that depreciation and interest are one of the most powerful things out there for real estate. Depreciation is taking the rental property you bought, you would subtract the value of the land itself, and then the improvements, which are the household on it, and the large majority of the value of the real estate can now be depreciated. And depending on where you are, it's like between 27 and 30 years. And that depreciation equates to an expense. So if you bought the house, say for $300,000, and there's $250,000 improvement on it and a $50,000 land, you would get to depreciate $250,000 over 27.4 years. And doing that means you're going to get that depreciation amount every year of which you didn't actually spend that money, but you get the expense for it. And getting the expense for it is really important, because if you have enough of those expenses of which didn't cost you any money, you get to roll those and put those towards your normal salary. So if you have a household where you're bringing in $100,000 and you can actually show that you have $25,000 in losses from your real estate, well, you just lowered your annual gross income to $75,000, which would also drop you down a tax bracket. Now, some of you are probably thinking like, oh, the new tax code fixed all that, so now none of those are benefits. Well, unfortunately, I got news for you. The new tax code did simplify a lot of things. If you're on the East Coast, you probably, had the misfortune of you're paying way more property taxes and you get deductions. And if you're in the middle, you get the nice benefit of, probably getting a larger deduction than you have in property taxes. The problem is none of those count towards your rental property. So when it comes to rental properties, there are no standard deductions. You are now back down to making sure you count every receipt, because if you don't, they don't roll. And then you also have to think about being a DIY landlord. There's so many things that go into it you don't think that normally equate to what is being a landlord. Right now, you are spending time listening to this webinar. You are, 1, taking time to listen. 2, you've got some kind of an internet access that allows you to be watching and streaming this. And you're doing it on some device that allows you now to both communicate with us and listen. And so whether that device is a laptop, whether that device is a phone, and whether that internet bill is yours or someone else's, of course, depends. But most of you do have a cell phone plan for data. Most of you have a home internet plan that you're paying for internet, where you provide your house with Wi-Fi. And then many of you now are actually buying a phone or running a laptop. So you didn't know, but normally those are household expenses. But you are using those right this very second to benefit yourself on an education basis, or even to learn software, which is about your rental business. And so I've written a few articles out there. You can find, if you just look up Joe Edgar, rental tax, you'll find many of the articles. I've been doing about a once a month post in Forbes lately, writing a lot about tax stuff. And so there's a recent one where I talk about the difference in the 199A, which is what came out of the newest tax stuff for 2019, versus a real estate professional, quote unquote. And a real estate professional is by far what I would think most of these listeners want to classify themselves, and not the 199A. Because to be a real estate professional requires that you have a certain amount of time throughout the year that you spend dedicated to your real estate business. And this time, right this very second, counts. So you don't want to pay yourself, because then it'll cost you more. I mean, you want to take those loss of much you can as far as time and hours. But any costs related to doing this are available, and this time, like I said, is part of that. So most of you are real estate professionals, and in being a real estate professional means that a lot of the costs that you do in your daily life that normally you don't get to deduct are deductible. Subject, of course, I always talk to a professional account advisor. I'm just Joe Schmo talking in general, but nonetheless, this is how I've run a lot of the strategy, and how TenantCloud is built around how most people will run their real estate business. And so you want to start looking at a lot of the things, like, for instance, your car. How many times do you drive and go and do something for your rentals? Well, those miles of which time that you drive are deductible, and those miles will include both the wear and tear on the car and the fuel that's involved in it. So you get those miles off. So you got to be tracking those miles. And then, again, the internet service and phone that you might use if you have a TenantCloud account, that again, your phone, the internet that you use are all deductible. And then the time that you're doing all that goes towards what would claim you as a real estate professional. In fact, even staying up late stressing about this call last night, or about whether or not the tenant's going to pay you rent, next week, all count as time put towards being a real estate professional. As most of you DIY landlords know, it's not an easy business, and we're all professionals at something other than being a real estate guru. And so every little trick that we can find is really important. So another one I just wrote, I don't know if it'll be live in time, but I've written about it before, but it might be out there in Forbes by the time this is, but it might be out today. We'll see if it's live. It's subject to Forbes. I've already written it, but whether or not they make it live, I don't know. And it refers to the Cohen rule. And the Cohen rule is really important because, like I mentioned, when the IRS gives you an audit and you have this whole drawer full of receipts and you think, oh, I've done all I need to do, it's great. And then they end up looking through the receipts and they can't figure out how any of these tie to the property. Well, imagine now there are some other receipts of which you forgot about. Big expenses, like I put a roof on. So you're like, oh, well, it's not in here, but I know I did it. I'll go back and talk with the roofer, and I'll get a receipt from him. Unfortunately, you cannot retroactively get receipts. That's against the law. So once you're in an audit, there is no going back for any receipt, even if it actually did take place and there's evidence. You have problems. You can show a credit card receipt, but if you can't show it in documented form and how it tied to the property, then again, you have an expense of which you can't use towards your deductible, which is the whole point of your business. That's why it's important to run all that. And so what the Cohen rule allows us to do is it means if you have a system of record, which TenantCloud is, that's your entire accounting software, you don't actually need receipts. And so without receipts, you have a system of record of which you are documenting the time, the amount, and the purpose, and which property it is tied to. That is what TenantCloud does by default. You can't enter an expense without those, and that's for a reason. That specific reason is because at the end of it, it's going to automatically produce you a Schedule E. So when you run your Schedule E report and you turn this over into, your accountant, and to be clear, it's not producing the actual Schedule E. It is a preparation report. It's a tax preparation report. So it's going to put all of your properties in the right categories based on the categories that are on your Schedule E. So in about 2 seconds, you can either give it to a tax person if you work with one, and they will just love you because, wow, it's already filled out. Or 2, if you're doing it yourself, it's going to be really easy to take those and add them in. And so in a matter of seconds, you'll do what used to take you hours and hours and weeks. And unfortunately, I still work with some property managers that I haven't got to switch to TenantCloud. They're much larger properties. The portfolio is getting pretty big. And for those ones, I can't stand it. I still have to use it, and I get so frustrated, and it makes me smile when all the properties I have on TenantCloud, I can just print out and they're done. It's amazing. But that Schedule E report, it's already going to be prepared for you, ready to go and done. And whatever numbers are pulled out of there are backed up now by an entire flow where you can show there was a system of record in place. Every single expense is tied to a property, and everything is done. And so that's what's really beneficial about the Schedule E is it's one that many, don't give a lot of value to, but to have a system that does all your accounting automatically and will produce a Schedule E saves you an enormous amount of time, especially when you're an active, investor in real estate. It's going to help you get all of those losses that you need, all those expenses you need to be tracking to help lower your AGI and increase your cash flow. And that's really what the game is about. That's why you're willing to wake up and be a landlord, because the other reasons aren't why you wake up. That's why you're willing to wake up and be a landlord, is because you have those benefits. It's going to help you grow your wealth. You're going to be able to retire early. You're going to be able to have a better life in your retirement. That's why you're doing this. And so making that your goal and helping you do that is what our mission here is at TenantCloud. And so that's really where the system is designed to really do that. And so having, again, TenantCloud is a system of record. It helps you. There's these things called these Cohen rules that help you put these things together. Now, there's one part I do want to caveat that and that is the 1099 form. We don't have it where you're able to produce the 1099 form, but that is coming. We're working on having that automatically done. And so the IRS does publish their 1099 forms every year. They change slightly sometimes. Most of the time they're the same. But soon you'll be able to produce all your 1099s with one click of a button. And we're hoping to then have that followed where you can actually have them mailed out. And so in a matter of seconds, you can just hit a button and have it all done. So that's coming. Lots of stuff being built out there. And so lots of new, fun, exciting things coming within those reports. But again, I want to reiterate that I do write about this fairly often. There's a lot of things we won't get into now, and I know I probably just stirred up a number of people's interest in wanting to ask lots of questions about this. And I know I have to go here, so I won't be around for the question and answer piece today, unfortunately. But if we do get enough interest in theirs, I'd love to do this again, and we can just have some of those parts be part of it. But I know I don't want to take up all that time in regards to a webinar, because I know it's probably a lot of people who are trying to figure out the software, so I don't want to overtake that in this conversation. But as you can see, and I know Chris is kind of running this, but up on the reports, you can run all your tax stuff, so you can really separate these out. And if you are a property manager who's running this, this is a great asset for your owners. This Schedule E isn't designed for the property manager because the property manager doesn't file a Schedule E. Even though it's in your property manager account, it is still set for the owner themselves. So you can pass this document on to the owner and they can have all their properties done. And coming from an owner that does use multiple different softwares, depending on where I am and what location, this is amazing come tax time. This is a game changer. One I wish they did a long time ago. So it's really nice that you have lots of settings in here as both a property manager or DIY landlord to run all of those in one place for everything. So that kind of, I am glad again, Chris, I want to talk about it because it is tax time, and that Schedule E, even though it's a simple little doc, it is one that is extremely important. And it can be something that can be as simple as being run, but what is done behind the scenes is no short of a large task to get it to do that. So again, one important thing about that is when you create a maintenance request, you have the ability, and I know Chris is navigating around here to show that you're able to add those expenses. So if it's if you've done a maintenance request and you find out that it's the tenant's responsibility, well, that's great because you can invoice the tenant right there, right in the maintenance request, and it stays, along with that data so you can see it later. But again, tied all to your Schedule E. And then if you have an expense where you go and buy something, you go to Home Depot, you open your phone, snap a photo if you want the receipt, or if not, you enter the amount and store it, and you're done for both of them either way. But now it's tabbed all the way through. So later you can look at like, oh, this equipment is going through this. And so one thing that's unique, I know it's a tax time, but if you all haven't been keeping track of your equipment for each property, that's a really good thing that we add in there, that you can have equipment. And by that, I mean, add in your fridge, add in your stove, all of those appliances you can be tracking in there. And when you add a maintenance request, you can assign that piece of equipment to that maintenance request so you can keep track of it over time. The more properties you get, the more you're going to look like, man, I seem to keep changing, the generator on this fridge. Maybe I should buy a new fridge. And so it comes in nice and handy. But again, all of those are tied all the way to your Schedule E. And so by keeping track of it in there, it's done. But the real benefit for anyone who is just starting and say, listen, I'm real light, I don't want to get into it deep right now. I know I've got a drawer full of receipts and I've been keeping like a pad of paper and a pencil, or maybe an Excel spreadsheet. And for those of you keeping an Excel spreadsheet, remember, if you go back and change things later, you could be in a major violation with IRS. So once you go into an audit, you do have to show reference to all of them. So if you are keeping an Excel, be very warned that you have to be very thorough about what it is you're doing. It's doing the stuff that TenantCloud automatically does by default. And so it's one of those basic things. Like, for instance, as a landlord, did you know that you can be liable if you're not supplying a receipt to your tenants? And so you could lose as much in some states as an entire month's rent for not supplying. That's why I tell tenants never pay in cash, because they really have no document way to show it. But when they don't pay in cash, if they pay in check and you didn't supply a receipt, you realize that you're liable. And if they find out, they can definitely take you to a court and show that you haven't been providing these receipts. And so to make that nice and easy, that's why TenantCloud is a live feed. So one, any violations as far as supplying information, you already have done that. They have their own portal. They can see live accounting whenever they want. They have access to their lease anytime they want. So that's the second one, which is the landlord has to supply. In some states, it's within 24 hours, supply the lease. You've already done that. And then the third one is a receipt. If they pay online, that receipt is immediate and stored in TenantCloud. Now, what's great is now your tenant has that receipt. You're done. You didn't do anything. You didn't even log in. You set it up one time, you walked away, you went sailing, and you came back, and all this is happening in the background. Yes, I love sailing. But then on your Schedule E, it's already done. And so this is set up where it's automatic, where the tenant paid online, they paid rent, they have a receipt, it went through to your bank account, you have cash, and it is already accounted for, ready for tax time. I couldn't think of anything more simple in the property management world than that alone, because you as a DIY landlord didn't do a thing. You got to set it up, but after that, it's automatic. And then if your tenant falls behind, and they're not paying their rent. Well, those late fees are created automatically. And when the tenant pays those, again, they're given a receipt. It's documented of why you overcharged them, because that, again, is a violation if you didn't provide a receipt, and the date of which they paid if you didn't provide those. So that's done automatically, and those are sent all the way through to your Schedule E and match with all your categories. So come tax time, you didn't have to do anything, add up anything different. And if there's ever an audit, you can look at your Schedule E, and that entire Schedule E can be reverse engineered for audit to show that you did it all on a system of record, and it matches to the exact property of what it is, and to meet all the local laws, you provided receipts to your tenants. And so that's why, even though it seems, I know a lot of people come into it, and TenantCloud is a whole different concept to property management. And some get frustrated at first because they're like, I don't get it. I'm used to these really clunky property management softwares that are like a grandiose spreadsheet, and I just want that, and then it takes a little while. And after, I give them a demo and I show them what TenantCloud does, then they realize the time that it is really saving. So for anyone hearing who's, at the first time, give it a little time and understand that it is giving a tenant their own account, their own separate account that you don't control intentionally, to meet all the requirements for local laws, because that tenant now has access to all their information of which you can share to them. So they can't get you on that one. So it's protecting you. And then it's giving them receipts, because it's not connected to your account. That does count as a receipt, and they are receiving it digitally. They've agreed to receive it digitally. And then you have a service professional. So when you get a maintenance request from a tenant, you can document how you dealt with that maintenance request, how you sent it on, how someone responded, you met the time limits for response, and how a service professional is getting to it, and they can communicate. And so what's nice is you, as a property manager, you did connect to a service professional, you did it, and then you can pay them. And then in the whole scheme of things, because you paid them and you used TenantCloud, you didn't have to do anything but hit pay, and it's all, again, kept track, and your accounting is all done for you automatically. And so even though it seems very different, no other software out there focused on property management does that. It's the first one to encompass all of those pieces, and because it encompasses all those pieces, it's doing your accounting for you. The idea is that you don't have to go and do accounting, because that's why you have a drawer full of receipt. It's not fun. Like you don't look forward to the day you got to sort through all those, and that's why they stay in a bin and never get sorted, and you just put a date on it and you think you've done all that's needed to do because you kept receipts. But now you can actually do what needs to be done and stop keeping those receipts and be prepared, and come April 14th, I don't even know what it is this year. Is it April? It might be April 16th. Come tax day, you'll sleep with ease, because you're like, what, even if I get audited, I'm prepared, I'm ready to go, and I have my deductions, and you were able to lower your AGI and increase your cash flow, and on your way to be an independent retiree. So we all have that goal. So with that, I don't want to take too much time, but I do appreciate the invite to kind of walk through and talk about some of the software and why it's laid out in certain ways. And so I think once you take into account, that is what it is. I mean, I built it around how I grew my own independent wealth. And just so you know, I bought my first property at 14. I had my first introductory to what the word capital gains tax meant when I was 15. I grew up very poor, so my parents have never had to pay that. And so for me, at a 15-year-old, to have to learn what that was is pretty surprising. And so from many years, and now, I don't know how many hundreds. I think we have we're in the thousands now of rental doors. And so to have those and grow those, and now go from single family to where I was crawling under houses and jacking them up with a hammer, trying to put foundations under them, and I've fixed lots and lots. I can't even count how many toilets I have fixed in my life. I still fix toilets. To that, in order to have now a large multifamily portfolio, I've seen the strategies all around, and they're basically the exact same. But what is important is the large REITs who are running multifamily, they're really good at tabbing and tracking every one of their deductible expenses, and the DIYs aren't. And that's what TenantCloud is designed around. So when you look through the software, it is designed to help you and allow it to be as automatic as possible. And so you'll see lots of things. We have lots of things coming. We're trying to, I know we have a mixture of like trying to clean up the experience from old stuff and then build lots of new stuff. And so bear with us because, our goal is really to make life easier for landlords, help you grow your independent wealth, and do it without charging you a fortune. And so we have been very fortunate that we've been able to supply as many landlords as we have. I think we're over 500,000 landlords now or something. And the majority of them are using a free solution. So again, thanks for inviting me. I've got to run to the next one. But like I said, if there's a lot of interest, we can follow up on this. But appreciate it. Hope everybody has a great day.
Awesome. Thanks, Joe. We appreciate you taking the time out of your schedule to join us for this webinar and provide all of that helpful information. I know I learned a thing or two just from listening to you talk about a couple of those things. And I think that a lot of the listeners who are attending this webinar probably have learned a thing or two as well. So just to recap a few of the things that Joe brought up over the past 20 minutes or so is some key pointers on tracking income inside of TenantCloud. And this might seem a little bit repetitive, but we did want to make sure that we touched on a couple of these things real quick. The thing you want to make sure you're doing is tracking all of your income and all of your expenses in TenantCloud. And like I said at the beginning, a lot of that is done automatically inside of TenantCloud, but if it's not done automatically and it's a one-off income or expense, you do want to make sure that you're recording that. So you want to make sure you're recording rent payments. You want to make sure that you're covering unique situations, like if a tenant paid rent for the last month's rent payment, even if it's for the next year, you generally need to record that as income for this year. And you can speak with a tax consultant on that or consult with the irs.gov website on the best practices for recording rental income, even if it's paid in advance for the following year. Other scenarios that are kind of weird that you want to make sure you're watching out for is in the event that you're using a security deposit as the final payment towards an outstanding rent invoice, and making sure that that's recorded as income. When you do that inside of TenantCloud, that automatically tracks that as an income payment. Once you end a lease and you apply that deposit to an outstanding invoice, it's treated as income. So you don't have to worry about that being accounted for, but you do want to be aware that that is how it's being recorded in the system because that's the way it's supposed to be tracked. Also, in the event of a scenario where this happens quite a bit, where a tenant provides services at your rental property. So for instance, let's say we used the example earlier, a gutter breaks down, the tenant says, hey, I can fix it. You say, okay, tenant fixes it, and you give him $100 off of his rent. Well, technically you're required to record that service received as a payment in lieu of actual physical money, but you're supposed to record it as income. So you would go into the system and essentially create it as a credit, which you can actually do through the accounting, money in, and credits tab. And the category would be tenant expended cost credits. That essentially means that the tenant provided a service that was in lieu of physical money being paid to you, but you're still required to report it as income. And again, part of this webinar involves a lot of conversations around taxes and accounting and filing and IRS laws and state and local laws. And so none of us are tax consultants or accountants. And so it is important that you do consult with a tax consultant or attorney or accountant and get the correct answers for your business and your operations and your state, your city, and to make sure that you're abiding by all of the federal regulations as it concerns accounting and filing taxes. So I do want to put that disclosure in there to make sure that you are following that and doing due diligence in that regard. A few other things that we did want to bring up as far as accounting goes inside of TenantCloud is there are other things that Joe brought up, like recording expenses, for instance, travel, phone bills, internet access, the time that you're spending doing it to be able to account for being a landlord is dependent on the amount of time that you spend being a landlord. And there's a lot of scenarios where you don't even realize it unless you're really proactively thinking about it, but you are actually spending time working, even if you don't initially realize it. Insurance expenses and all kinds of other things can often be tax deductible expenses. And so you want to make sure that you're being proactive about those things, researching those things. And then once you've confirmed that something is a tax deductible expense, you need to enter it into TenantCloud. because when you enter it into TenantCloud, then it is accounted for via the tax prep report, which you then use for your Schedule E and for your filing your taxes at the end of the year. The other thing that you want to make sure that you do, which Joe touched on as well, is under our properties tab, and we kind of went into this a little bit while Joe was talking here, is the equipment button inside of TenantCloud. This particular property doesn't have it, but this one does. You can see that there are various pieces of equipment that have been assigned to either the unit or to the property in this property. And you can click view on any of these pieces of equipment, and you can see all the information that you've entered, as well as the maintenance history that's connected with this particular piece of equipment. And so these are really helpful for, like Joe said, a system of accounting, a system of record, and being able to show a track record that you routinely track these things. And so by assigning equipment to maintenance requests routinely, every time you receive a maintenance request that involves equipment inside the unit or on the property, you're creating this very detailed record of the maintenance history, and then each maintenance request is then going to have an invoice tied to it if you invoice the tenant or if you created an expense related to that maintenance request that was tied to that piece of equipment, which is then tied to that property. And so the system does all of this intricate tying together all for you, all automatically. And you just have to make sure that as you're entering it, that you're entering the correct information. So jumping back out here, if you wanted to go add equipment to a property to start doing this and to better track expenses and maintenance and so on and so forth, and there are other uses with this equipment maintenance history as well, aside from just accounting, you can actually see how much time you've spent providing maintenance for a specific piece of equipment. So if you've serviced an HVAC unit 10 times in 12 months, well, chances are it might be time to get rid of that HVAC unit and get something else, especially if it's out of warranty. And so there's a few other applications such as scheduling recurring maintenance reminders and so on and so forth. But as far as the accounting side goes, it's absolutely invaluable to have this tool. So you would just click on the properties tab, you'd go to the equipment tab on the property, click add equipment, and just add whatever piece of equipment and all the information related to that piece of equipment. And then once you have created that piece of equipment, it is tied to that property, and you can now start linking that in maintenance requests that you receive that are associated with that piece of equipment. The other thing that you can do is using the calculator for property depreciation. So if you go to the reports tab and go all the way to the bottom right here, if you don't have it bookmarked, you'll see a depreciation tracker. Now the depreciation tracker does help you to create a schedule of depreciation, but it does not proactively or actively do it. It's not an active calculator that takes into account any invoices you've entered for the property, for mortgage payments and interest payments and so on and so forth. But it is still helpful, even though it does not come with that automation, to be able to create this table here to see the depreciation on the property over the course of the ownership of it. And so this is a really valuable tool that a lot of people find value in. Ultimately, there is a goal to automate this and to incorporate this into the full accounting system. It's just not quite there yet, so something to look forward to in the future. The other thing you want to make sure when doing and when we're talking about all of this is that even though TenantCloud does do a lot of the work for you, it does a lot of the heavy lifting, you do want to make sure that you set aside the time each year to make sure that you review your accounting entries from the prior year. Make sure that you double check to make sure that you didn't have any accounting entries, because anytime you do have human entries, which if you're doing one-off entries, there is the ability to do errors. And so you want to make sure that all of your accounting matches up to what it should be, and make sure that all of the manual entries that you've done over the course of the year do not have any errors and are free of mistakes. And if so, to take the time to make those corrections before you generate or before you print out the tax prep report to then hand to the accountant to file your taxes for the end of the year. The information that you put into the system determines the quality of the information that you get out of the system. And if you're putting in bad information or incorrect information, you're going to get incorrect information out. And so that could be something as simple as what date you record an invoice was paid. If you record it that it was paid on January 1st of 2020, and you're trying to create a tax prep report that is on a cash accounting type, and you only want it for January 1st, 2019 through December 31st, 2019, it's not going to show up that expense or that invoice that you recorded as paid on January 1st, 2020, because you entered the incorrect date that payment came through on a cash accounting type. So you want to make sure that you're just double checking all of that. Take the time to do it. Don't rush through it. It is doing a lot of the heavy lifting for you. It is going to save you hours and hours and possibly days and even weeks of work for filing your year-end taxes, but it's still a good thing to double check your work. The other thing we do want to point out is you do have the option in TenantCloud to export your data at any given time. And so it is backed up through Amazon Web Services, and Amazon Web Services has servers throughout the world, and it's backed up in multiple locations. However, it's still nice to sometimes export the year's data and put it in a file just for future reference, and to be able to access a physical paper version of that information should you ever want it. So you just click Export Data under your settings button, and you can just export strictly accounting data if you want. It doesn't matter, or you can export all of it. Doesn't make a huge difference, but just wanted to point out that you do have that option. I know a lot of people out there prefer to have a physical format of this information in addition to the digital, and so we like to point out that you can export that information. As always, make sure you stay up to date on any tax law changes. Make sure that you consult with a accountant or tax attorney or real estate, somebody who is licensed in real estate accounting, and so on and so forth. We do want to make sure that you are dotting your I's and crossing all your T's when it comes to this. It is extremely important that A, you're educated on it, but also B, that you're as informed as possible so you're not making mistakes that will end up catching up to you in the long run. And so we appreciate you taking the time out of your day to listen to this webinar and to attend it. And if you have any questions, feel free to use the Q&A button at the bottom of your screen. We will answer a few of the questions live that are questions that would benefit everybody hearing the answers to. If we can't get to your question or you have a question that comes up after the webinar, feel free to use the Need Help button in the bottom left-hand corner of your TenantCloud account, and feel free to submit a support ticket. If it's system software related, we'll be happy to assist you. If it is a tax related question, we're not able to answer it because we're not tax accountants. We'll just defer you to a tax accountant or just an accountant in general, someone who would be more authorized to speak with you on that subject. And as always, we'll look forward to speaking with you next time. And thank you for checking out TenantCloud. If you need further assistance, have any other questions about the software, you can sign up at TenantCloud.com. We do have a podcast. We have almost 100 FAQ instructional videos that walk you through about every feature in TenantCloud. We have prior webinars that have been uploaded onto our YouTube channel. This one will also be uploaded on there as well. And we also have a blog, TenantCloud.com. Go to our blogs, and we have all kinds of resources for users and non-users alike. And again, thanks for spending time with us. We'll talk with you later.